Hi there, traders. This is Brad Goodwin with the Daily Market Insight for Friday, the 11th of March. All right, now the key events going on. Obviously, we had the ECB meeting yesterday. Now they've come out and said they're going to speed up their the end of their stimulus packages, meaning they could move to higher rates sooner than later, right? But it's sort of offset by what's happening in with the Russia-Ukraine situation. So not a lot of like euro strength on that, but what we did see is following that, if I just come back, change pages, we had some key economic numbers out yesterday, which generally impact all the markets, right? You got what I'm talking about is the US CPI numbers. Now, this is the biggest print here, I think I said in 40 years. CPI year on year, 7.9% now, which pretty much guarantees the Fed are going to raise rates next week. But where we saw dollar strength come back into the market, it's primarily because it's such a high number. Now, the Fed was already expected to raise interest rates next week, but this could lead to a more aggressive move or more aggressive forward guidance, right? They need to start trying to curb that inflation because it's a slippery slope from 8 to 10%. It can happen very quickly. So what we've seen, if I just come back to the global markets here and give you a look, basically you're trying to get an assessment when you come to look at the markets after you've been away, whether it's 4 hours, 10 hours, whatever it is, the next day, try and work out what's going on. So the dollar index, okay, rallied, sort of dribbled off at the end. You've got euro, which came back and retested that sort of previous low there, right on the money, back to 110 the figure. Now, it's found a bit of a base here. It feels pretty comfortable going down. As I said, looking to sell rallies still because until that Russian-Ukraine situation and the ECB really kick into gear, the euro is going to be bearish. Volatility index, well, it eased off from 37.5 back to 30. You want to see it back down here around 20, and that's where the comfort zone is. That means that everyone's happy and comfortable with Russia, Ukraine, and everything else with oil going on, etc. So to me, as far as the commodities go, gold and oil look like they've peaked, right? If you're a bit of a candlestick person, you might see a bit of a shooting star there. I know it's sort of retraced a bit, but that's exactly where we are. Looks like it's done for the moment, especially with oil, right? Because Russia have come out and said they're going to honor the current contracts they have in place, contractual obligations, and they're also saying that the supply issues are massively overdone, which I wouldn't be surprised. Media love to sort of beat those things up. So maybe we've seen the top in oil. Now, just looking at the equities, the S&P just sort of getting slowly drifting lower, and I'm surprised it hasn't gone a little bit more aggressive after those US inflation numbers, right? Higher inflation means the Fed raises interest rates, which means directly equity markets fall. The Nasdaq, on the other hand, is starting to look comfortable under this 200-day moving average, right? And I guess if you're holding long positions there, that wouldn't be sort of cool because you hate to see an instrument starting to look comfortable going down, right? And this is sort of, Bitcoin has been range trading here, but it's struggling to get back above this 200-day moving average around 44,000. And that's something to keep an eye on for the crypto traders. All right, so just having a look here, coming back to the main data now, right? So there's one thing to look at charts. There's another thing to look at the data. The whole crypto space, well, it's sort of under pressure. And you're trying to work out where that movement's coming from. Obviously, Biden had a bit of input yesterday, went up and went straight back down. Tells you it's probably a little bit long, that market. Now, this is a bit of a surprise for me, right? The equity markets I thought they might have another 3% down day after a very solid up-day rally yesterday. We didn't see that. Now, that should roll into the Australasian, Asian equities and the European equity markets. Okay, it's not like a big, massive bad day, but it's not great. Maybe offsetting that as we go through the Asian and European sessions is the fact that the US equity futures, once again, are slowly back in the positive, right? Which is not uncommon. Once the US market shuts, the market, you usually see a bit of take profit or profit taking, I should say, and that sort of leads to a bit of a correction the other way. and we'll see how that plays out as we go forward. But US CPI, as I said, almost guarantees the Fed to raise interest rates next week, and potentially looking for more aggressive forward guidance. The major currency pairs, well, I tell you what, they're not exactly giving us a lot, right? If anything, dollar Swiss, I'll show you the dollar Swiss chart in a second, right up against good resistance there around 93 the figure. Potentially the best technical setup. Now, do you buy it or sell it? Well, it's a little bit, the momentum is faded, but it depends on what your view is with the dollar and euro. So I'm thinking US dollar still up with the US inflation numbers, euro down. And so that may see dollar Swiss snap to the top side above 93 the figure. But we are lacking momentum at this point. Commodity-wise, okay, as I said, gold, silver, well, it's the start of the Asian session, only slightly down. Overall, as you'd expect with the situation in Europe, having a good start month to date, year to date sort of run for those. Crude, well, it's back a touch, but we'll have to see how that sort of plays out. Still 107, lofty levels. Risk on, risk off. Well, not actually a very clear signal there for, from that direct link from the equity markets. So make sure you keep an eye on that. The safe havens, not really in play either at all. Okay, looks like they're at the end of their run. And if you're looking to trade oil, well, you can sort of check that out. So that's where we are at the moment, right? And if I just switch back over to, what you sort of need to be focusing on, right? It's the random news around, obviously, Russia, Ukraine. So now, I'll say this quite a bit over the next week or so. Once this, the shock of the event happens, right? We're already through that. Then it becomes into the phase of, okay, how it's going to play out. You give another week, the market will become so desensitized to it that they will discount anything that happens there. So that's, and that's the way these events roll out, has done over the last 30 years. So I'm not expecting anything big unless there's a real big catastrophic event. Now, if you're looking to trade, keep an eye on the fundamentals, that they are sort of lingering. Okay, we've got some UK manufacturing numbers, manufacturing output, pretty aggressive numbers, the GDP estimates, etc. You want to sort of keep abreast of what's going on there, and the Canadian employment numbers. Right, it's one of those months where the Canadian employment numbers come out on a different Friday to the non-farm payrolls. Gives you a bit of a look at how things are going, and the University of Michigan sentiment numbers there. So, but just understand, when you are looking at the like the pairs, right? You might be sort of getting excited and thinking, well, I might trade dollar CAD, right? Well, just understand it's not easy, because the volatility in oil, which can be a major directional issue for dollar CAD, is really all over the place, right? Then you've got the overlay that with what's going on the dollar, right? We've got a strong dollar situation with the US CPI numbers, and then you've got the Canadian employment numbers. So you got about three different things pulling this thing up and down. It's not exactly easy. Now, if you are thinking of doing that, if I just click on my other charts, what you want to do is ideally get up your templates, have a look at the hourly and daily charts, okay, for dollar CAD. Make sure you've got the news up here as well, so you can actually analyze what's going on, right? The Canadian employment numbers are really good opportunity to get into trades. All you're looking to do is find out where that support and resistance is, okay? That'll give you a bit of insight into where market liquidity is, right? And if I draw that, see on the downside here as well, you've got a situation where we've got this low. The previous low was here, and we're sort of down through it. I would not be drawing my trend line to here, right? It's only like 2 touches. It's just where the current market is. If anything, you've got the start of the trend line there, which just sort of chops straight through it. So on the hourlies, as you'd expect, it's not exactly clear and smooth running. Let me just get the top of this one here. I'll have to fix that up in a sec. So once again, all I'm trying to do is see how does the picture look, right? So on the hourlies there, it doesn't look like awesome, right? Because it's sort of drifting down, back sort of trading a little bit mid-range here. Okay, not great for any sort of entry level there. So if I widen that out, then I come over to the dailies, right? Just to give you a bit of a run through of how I'm doing this sort of stuff. And let me just come back to the chart here. Just trying to find out where these longer term support levels are. You can see that there. Okay, you know, if anything, there's another one starting from here. And top side, well, looks pretty gnarly, right? So you got the massive high over here. Now, if you draw that to the current high, well, it is lower. It's the only level you've got, but this is where I would sort of change my color coding. So when I come back to it, I know it's not like a really, really strong one. If anything, this is where a bit of common sense comes in with your analysis. And you can see here, there's a string of highs, and I'd be more inclined to sort of look at that high as something the market might be looking at. So don't forget, we're not trying to find what I like. We're trying to find what the rest of the market is looking at. So if I widen that out, it gives you a bit more perspective. And the other thing with the daily charts is, you know, throwing in the 200-day moving average or smooth moving average, you can actually sort of see it at the moment. It's just flipping up and down through this, right? Pretty much directionless, even though we've seen oil rally through the roof, right? You'd expect it to be lower, but it's not. So when you look at this picture here, looking to trade dollar CAD employment numbers, what do you think? Well, this is in the middle of nowhere. It's a tough one. Where's the overall trend in dollar CAD? Well, if anything, it's probably sideways. I mean, that's not a great trend line. You're probably drawing a straight line there instead of that ray. Anyway, so that's sort of what I would be doing is having a look across the market, trying to find if there is an opportunity. Once again, we do have sterling numbers. I'm not exactly sure what's going on with sterling, except I know it is getting belted, right? Apparently, a lot of Russians have interest in real estate in the UK, and that's been coming out. So that's something you need to be aware of as well. And just trying to piece it together. You've got so many different instruments here to trade. Like the choice is almost endless. What you've got to find is the easiest trade, right? Whether it's the equity indices, I think they've already had their run for the week, especially after the US CPI numbers. Keep an eye, obviously, for direction on the US equity futures. The major currency pairs, well, actually, I don't want to let you down. I did mention dollar Swiss. If I just come back, where are we? Get on the right page. Okay, so this just having a look across the major currency pairs. I still like euro to sell on rallies, right? Which would mean but it's got like, actually, let me just clear that thing there. But so sell on rallies, but I'm talking back towards 111.80, right? It's at 110. So you get 180 points on the top side before we really find a solid resistance level, 120 on the top side. That still gives the dollar Swiss chance to get up towards 94, right? Strong. And this is what I'm expecting, right? So you get strong US numbers. The safe haven trade volatility index is drifting lower. Maybe the final unwinding of some Swiss positions may see dollar Swiss pop to the top side. It's sort of, it's the best looking technical pair out there at the moment, right? So that's what I was sort of referring to previously. So, all right, guys, that's pretty much where we're at. The plenty going on. Obviously, a page like this, you can actually turn off the blinking if it's doing your head in. But what you're trying to work out is from the US equity markets, is there a flow-on effect into the majors? Are the cryptos working with the equity markets or not, or just dollar strength? And same with the connection with the commodities, risk on, risk off, obviously the safe havens, and you got the oil trade there as well. As I said, plenty to look at. You need to know how to connect the markets. That's the most important aspect of this, right? If you don't understand what I'm talking about, maybe jump online and do one of those courses. All right, guys, have a good one. All the best. Cheerio.